Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's analysis, we're taking a close and careful look at a commonly discussed question among Iraqi dinar observers. What could be a realistic range for a potential change in the dinar's exchange rate? Specifically, we're examining the claim that the Iraqi dinar could move toward a value in the range of around $380 based on historical comparisons with Kuwait and Iraq's past currency strength. This is a topic that generates a lot of interest, but it also requires a grounded, fact-based approach. So in this report, we'll break down the logic behind this claim, compare it with economic realities, and explore what it might mean in both the short term and the long term for those following Iraq's currency developments. Let's begin with the core argument. The idea presented is that historically, particularly before the 1990s, the Iraqi dinar held a very strong value on the global stage. In fact, during the 1970s and 1980s, the Iraqi dinar was indeed one of the highest valued currencies in the world. At certain points, it was trading above $3 per dinar. This historical fact is often cited as a foundation for the belief that such levels could be reached again. The comparison with Kuwait is also part of this reasoning. The Kuwaiti dinar is currently one of the strongest currencies globally, typically trading above $3. The argument suggests that because Iraq's currency historically traded at a higher value than Kuwait's, there is a precedent for Iraq returning to a similar or even higher level, potentially in the range of $3.80 or above. However, while this historical comparison is factually grounded, it is essential to understand that exchange rates are not determined solely by past values. Modern currency valuation is influenced by a wide range of economic factors, including GDP size, foreign reserves, inflation rates, trade balances, political stability, monetary policy, and the structure of the financial system. Looking at Iraq today, the economic landscape is very different from what it was in the 1970s or 1980s. Iraq has undergone decades of conflict, sanctions, regime change, and reconstruction. These events have fundamentally reshaped its economy, its institutions, and its currency system. One key factor to consider is the current monetary framework. The Iraqi dinar today operates under a managed exchange rate system where the central bank maintains a relatively stable peg against the US dollar. This system is designed to control inflation and provide stability in a developing economy. Any significant shift in the exchange rate would require not only policy changes, but also strong underlying economic support. Another important consideration is the money supply. In the past, Iraq had a much smaller money supply, which supported a higher nominal exchange rate. Today, the volume of dinar in circulation is significantly larger. For the exchange rate to rise dramatically, without adjustments to the money supply, it would create severe imbalances in the economy. This brings us to a critical point. A higher exchange rate does not automatically mean a stronger or healthier economy. What matters more is purchasing power, economic productivity, and stability. A country can have a lower nominal exchange rate, but still maintain strong economic performance if its fundamentals are sound. Now, let's analyze the comparison with Kuwait more closely. Kuwait is a smaller country with a relatively stable political environment, a high level of per capita income, and a tightly managed monetary system. Its currency strength is supported by substantial foreign reserves, consistent oil revenues, and a well-established financial infrastructure. Iraq, while also rich in natural resources, is still in a phase of economic rebuilding and diversification. Although it has significant oil exports, it faces challenges such as budget deficits, infrastructure needs, and reliance on a single sector. These factors play a major role in determining currency valuation. So while the historical comparison provides an interesting perspective, it does not necessarily translate into a direct forecast for future exchange rates. In the short term, the most realistic expectation for the Iraqi dinar is continued stability within its current managed framework. The central bank has shown a consistent focus on maintaining exchange rate stability, controlling inflation, and improving financial transparency. These are positive signs for economic development, but they do not indicate an imminent move toward a dramatically higher exchange rate. In the medium to long term, there is potential for gradual strengthening of the dinar, but this would likely occur in a controlled and incremental manner. Factors that could support this include increased foreign investment, diversification of the economy, improvements in governance, and stronger integration into the global financial system. Structural reforms, particularly in the banking sector, are also crucial. Enhancing digital payment systems, increasing financial inclusion, and aligning with international banking standards can all contribute to a more robust economic environment. Over time, these developments can influence currency valuation in a positive direction. Another aspect to consider is the concept of redenomination versus revaluation. A redenomination involves changing the face value of the currency, often by removing zeros, without altering its real purchasing power. This is sometimes misunderstood as a revaluation, which is an actual increase in the currency's value relative to others. If Iraq were to pursue monetary reform, it could involve redenomination as part of a broader strategy to simplify transactions and improve confidence in the currency. However, this would not necessarily result in the kind of exchange rate levels suggested in the $380 range. It's also important to address the role of market expectations. Speculation can sometimes drive narratives that are not fully aligned with economic fundamentals. While it's natural for investors and observers to look for opportunities, responsible analysis requires separating possibility from probability. From a policy perspective, Iraqi authorities are more likely to prioritize stability and sustainable growth over dramatic currency shifts. A sudden and significant increase in the exchange rate could have unintended consequences, such as reduced export competitiveness and economic disruption. Therefore, any discussion about potential exchange rate ranges must be grounded in a realistic assessment of economic conditions. While it is not impossible for currencies to strengthen over time, such changes are typically gradual and supported by measurable improvements in economic performance. For those following the Iraqi dinar, the key takeaway is to focus on fundamentals rather than speculative targets. Indicators such as GDP growth, fiscal policy, inflation trends, and foreign reserves provide a more reliable basis for understanding the direction of the currency. In the long term, Iraq's economic potential is significant. With its natural resources, strategic location, and young population, the country has the capacity to achieve meaningful growth. If reforms continue and stability is maintained, the dinar could benefit from increased confidence and stronger economic backing. However, reaching exchange rate levels comparable to historical highs or surpassing currencies like Kuwait's would require substantial and sustained progress across multiple areas. This includes not only economic metrics, but also institutional strength and global integration. In conclusion, while the idea of the Iraqi dinar reaching a value around $3.80 is rooted in historical context, it is not currently supported by present-day economic realities. A balanced and analytical approach suggests that any changes in the exchange rate will likely be gradual and closely tied to measurable improvements in Iraq's economy. As always, staying informed with credible information and maintaining realistic expectations is essential when following currency developments. Thank you for watching. Make sure to subscribe for responsible and factual Iraqi dinar updates. And remember, this content is for informational purposes only and should not be considered financial advice.